Congratulations, the stock higher today. To what do you attribute the advertising revenue growth?
Well, first of all, thanks for having me again. And the bottom line is it was just a phenomenal set of numbers that we just presented. You've referred to the 6% U.S. ad growth. We've also guided to an acceleration of advertising, mid-single digits. Advertising in D&I, our international business, we guided to even high single digits. And I think there are two things that we see with these numbers and the guidance. Number one is there's a lot of longevity in our core business that I think some people are surprised about. And number two is we're seeing some first returns come in on our investments on the direct-to-consumer side, some contributions to revenue, and that shows a very clear path to strong growth in the future. And bottom line is performance is industry-leading, revenue growth accelerating, and top of industry margins. So I think top to bottom a good set of numbers.
Now, how much control do you have over these numbers? After all, advertising is only something you can lure in the best of times, like during campaign times, for example. What are you telling your investors about how you're going to keep those numbers up?
Well, point number one is if you look at our portfolio now, many people don't understand we're the largest TV company for female demos in the US. We're the number one. It's very difficult not to buy our advertising inventory for many of the fast-moving consumer goods. It's a very coveted demographic, female audiences. We're number one. We're there. Second point I want to make is we are seeing declines in universe estimates, people using television, et cetera. Yet in that environment, we're still able to put up a 6% growth number, right? So this is all baked in. As reach in TV becomes a more scarce resource, people are willing to pay up for it, and we're able to generate those kind of numbers. So I feel very good, and indeed we're pointing to an acceleration on the international side.
Gunnar, good morning. Is cord cutting accelerating?
Well, I don't have a crystal ball. Bottom line is we're not delusional. We're seeing what's happening in the industry. I want to point out though the Discovery portfolio is the most widely distributed portfolio. Not only in the U.S. where we have been very successful in getting distribution on the virtual MVPDs, the OTT offerings in the market, in addition to our traditional distribution. Also, if you look at it from a global perspective, I think we're different in the sense that we are everywhere in the world. 220 territories. We're reaching 400 million, close to 400 million homes every day with our portfolio, which is giving us a lot of portfolio benefits in today's world. But it's also a great starting point as we roll out direct-to-consumer offerings on a global basis. We can be so much more efficient because we are already reaching all those households on a day-to-day basis. So as we ramp up a global platform for direct-to-consumer products, we'll be able to efficiently roll that out.
Okay, but the focus is on streaming. Disney's numbers later on, I would almost guarantee the first question on the conference call is going to be about streaming and that story as they develop it and go forward from here. The nature of the product is changing. My question really is your sense of the delta on that, the rate of change? Are we seeing the second derivative changing? Are we seeing that change accelerating at this point?
Well, look, I don't want to speculate on sort of the broader industry trends. We're factoring in the decline in viewerships in the ecosystem in our projections, and I just pointed out on the call earlier that we're seeing an acceleration in advertising revenues. We're seeing mid-single-digit growth in our affiliate revenues. So, from that perspective, in this environment, our numbers are very much intact. And the second point is we have also talked about Discovery making the investments to build out that global direct-to-consumer platform. We hired Peter Faricy last year, who joined us in September from Amazon, who has a lot of experience in making those direct-to-consumer products scale. And he's been very active, and I have already guided to the fact that Discovery is making about $300 to $400 million in investments this year to build out that global technology platform. We're already seeing some early returns. Dplay is a product that we're offering in the Nordics. It's an AVOD and SVOD streaming platform that's already contributing nicely to our revenues in the second quarter on the back of us rolling out that new technology platform. And again, to my point earlier, I think we're in a very good position. We own all of our content across the globe. We're producing 8,000 hours of content every year. It's all ours across all platforms. We've got an industry leading distribution, close to 400 households on a global basis, and since Peter joined, we've been able to attract the talent that we need to build out those product features and the technology platform.
Netflix, one of those, investing quite heavily now in non-fiction, which obviously clearly directly competes with you guys. How are you going to counteract that investment from Netflix, but also presumably others will try the same thing?
Look, we operate in a competitive environment. There's no doubt, but we have been operating in that environment for 30 years. We've always had competitors. We've always been head-to-head with others who try to get our talent, compete for our shows. Bottom line is, this is what we do. We have 30 years of experience in that field, and to this point, we haven't lost any talent to Netflix. One thing that you got to keep in mind, Netflix is a great product, but from a talent perspective, if you're a chef, we can put you into close to 400 homes on day one. Whereas Netflix has a track record of sort of cutting series short after 2 or maybe 3 seasons, etc. The way our talent looks at what they're doing with us is building a brand for them that covers the entire global footprint and really allows them to build out a lot of business and brand value outside of the transaction of one individual series.